Hello guys, welcome back to another video. So in the previous video we have discussed about the term assets, and so the next step is to know about liabilities. So in this video we will be discussing about the term liability. What is the difference between assets and liabilities? Okay. Is the liability recordable, means in the books? Should we record the liability in the books, or it is just a liability? Okay, so let's start. So today's class will be like same basics of accounting. So let's start. So it is basics of accounting, same. So let's start discuss the term liability. So the term liability generally, very general, in general the term liability means anything that the business owes right? So what does it mean? It means anything which is payable to the outsider. To whom? Owes to outsiders, right? For general, it is very simple. It is generally, it is anything that the business owes to the outsider. But if you go a little further in depth, like we have done the same thing in assets with the assets. So if you go a little further with the word liability, it is beyond this. This is correct, but this is incomplete. For the basics, this is enough. But if you want to know little in depth, then you have to know this. This is the proper definition, okay? But I am representing it as a chart so that you understand in a better way. Okay, let's start. So liability, what does it mean by liability? Liability is a present obligation, PRE, present obligation. What does it mean by present obligation? The obligation belongs to the past, but we have to pay it in the present. Matlab, it is a present obligation arises from past events. हम लोग ने पास्ट में कुछ किया था जिसके वजह से प्रेजेंट में ऑब्लिगेशन है. ओके, एनीथिंग liability is a present obligation arises from past events. Okay, then future economic benefits from the entity. It should be a present obligation, arises from any past event, and it should occur outflows of future economic benefits from the entity. Like अगर हमने परचेज किया, सपोज एग्जांपल परचेज, we have done some purchase on credit basis. On credit, what does it mean? We have received the goods, but have we paid the money? Money paid? No. What does it mean? This is past arises from past event. This is a past event. Now we have received the goods in past, and money is still payable. Money is still payable. It is our present obligation, right? Got it? Suppose purchase on credit. अगर हम लोग ने क्रेडिट पे परचेज किया है goods, though we have received the goods already, right? We have already received the goods, but we haven't paid the money, so we have to pay now. So this is a past event and this is present obligation, right? Got it? Now one more example. Loan. We have taken the loan in the past. Okay, we have taken the loan in the past. So when we loan taken in the suppose 2019, we have taken a loan on 2019 in 2019. This is past event because it is past. Now we have taken the loan last year, but we have to repay it in the current year, in this year. So what does it mean? This is an obligation arises from past event and now we have to repay. Now we have to repay. It means our future economic benefits are going outside, right? Last year we have taken a loan, but this year we have to pay. You got it now? Yeah, same thing. Now you understood the concept of liability, but there are various types of liability, like contingent liabilities there, then various other forms. So the main question occurs, if anything is liability, should we record it or not? So same as assets, there are two conditions, two recognition condition. Yes, two recognition condition. What are these two recognition condition? Probable economic benefits outflow and amount of settlement can be measured reliably. Okay, same thing, same as assets, same to same. It should be only thing is, in assets there was inflow and here is outflow, because it is opposite of assets. Like assets are favorable for the business and liabilities are unfavorable, correct? So probable economic benefits outflow should be there and it should be measurable in monetary terms, right? Suppose something example, same thing. Let's discuss about purchase on credit Purchase on credit. In the first condition, probable economic benefits outflow. If you paid the money is gone outside, right, from the business. So first condition satisfied. Yes. But in the second case, amount to be settled can be measured. Acha, tell me one thing. If you purchase something in credit, you must have known the price, right? How much is due to the creditor. In case if you don't know the meaning of the creditor means the person the supplier from whom you bought the goods in credit. Okay, so purchase on credit is it is satisfying the probable economic future outflow conditions. It is satisfying. Second condition, amount of settlement can be measured reliably. Yes, it is, because you know how much you have to pay. So this condition also satisfied. So it should be recorded in the books of accounts. And suppose example number 2, right? your something happened in your company, on your factory, and the something happened in the company, and the case is in the law of court of law. Okay. So what you may lose the case, any case or legal action, So now, first, it is a liability. Is it a liability? So let's discuss. First, that any case, or legal action. So it is present obligation. Yes. Past arises from past event. Obviously, you must have done something. That's why they file a case against you, right? Yes. Is it outflows future economic benefits? Yes. If you lose the case, you might have got to give monetary compensation, right? So it is satisfying the conditions of a liability. But is it it should be recorded in the books or not? That we have to find. For that, these two conditions will help us. Like probable economic benefits outflow. Yes, probable. Probable means more than 50%. More than 50%. Okay, the chance of probable means the chance of the losing of the case is more than 50%. Got it, na? So suppose it is probable economic benefits outflow. You think that you may have lose the case. The opponent has more chance to win the case. So yes, this is satisfying the first condition because probable economic benefits outflow is there, probable. But in the next case, amount of settlement can be measured reliably. Achha, if something is in the court of law, can you decide how much will be the penalty? It depends on the judge and the act whatever you have done. So you can never pretend how much will be the fine and all, right? So it is not. Okay, so it is not satisfying. So this is the liability. It is a very simple. The main thing is it is the totally opposite of assets. The recognition conditions are same to same. Only the difference is here outflow, in assets there were inflows, right? Now liabilities may be in various forms. Loan, anything payable, anything which is payable, correct? So I hope you got it. It is very simple. If you don't understand, just rewind the video and watch it again. You will get it definitely. So just try to compare assets and liabilities and try to understand both the things together and find the differences. What is the differences? What are the differences? Then you will understand it better. Okay. So let's revise for the last time. Liabilities, it is a present obligation, right? Obligation you have to pay. Arises from past event. It should occur from the past event, and it should make any outflow of future economic benefits from the entity. Correct. And then we have given an example that is purchase on credit. Anything you have purchased on credit is a liability because it is received. You have already received the goods. It is from past. It is a past event, and you have to still pay the money. It is a present obligation to pay. So it is a liability. The next we have taken example is loan. Same thing. It is taken in the last year. So it is a past event, and we have to repay in near future. So it is a present obligation, right? So after that we got to know we discussed about the two recognition conditions. First, probable economic benefits outflow. Obviously, if something is going out from the business, then only it should be recorded and it will be called as liability, right? At this point and this point are same, correct? And amount of settlement can be measured reliably. If you can't measure it reliably means if you can't measure it only, then you can't record it. Now how you will record it? It will affect your balance sheet, right? It will affect your financial statements. So it should be measured reliably. So then we have discussed two example. First, purchase on credit. It is the same thing. Same. It is for satisfying both the conditions, probable economic benefits outflow and the amount settlement can be measured reliably. It is totally fulfill the conditions, so it should be recorded. But in case of any case or any legal issue or any legal action or any suit is filed against you, you don't know, you may not know how much charge you have to pay and all. So in this case, it is probable future economic benefits, it's satisfying, but in the next condition, that is amount of settlement can be measured reliably. No, it is not satisfying these conditions because we don't know how much you have to pay, right? I hope it helped you to understand the concept, right? If you will watch both the videos now, you will get to know the differences also, right? Thanks for watching the video, and do subscribe, hit the like button if you think it's helped you. Yeah, take care, bye bye.